Oil is up to 119 a barrel. It's just going parabolic, oil. Russia is the second largest producer of oil in the world. So there's going to be a lot less supply coming from Russia. It seems obvious now, right? Just invest all in oil because of the war, but I don't know if it's too late. It may still keep going up. But next time there's a war with Russia, Saudi Arabia, any of these top 10 countries, just put it all into oil, because apparently that's how you make a lot of money. Same thing happened in the '08 crisis, the Great Recession. Oil went up a ton. I think I have AVEC. So in 2008, it hit about 180 a barrel. But this is what happens, because oil is cyclical, so you can't really hold it long term and make money unless you happen to buy at the bottom. But in the long term, it just goes up and down. So if you wait, it's going to come back down. You can see if anybody who bought it around here, a lot of people just keep holding and they don't sell. So you would have seen a big drop, a big loss, unless you kept holding on until it came back up here. But that could be another year. And then it come negative. So it's really cyclical. So you have to take in your gains. Yeah, I know, right? I remember when oil was under $2 a gallon. That was in the 90s, right? I remember in college, I used to pay under $2. But I hope everybody bought their oil stocks. I know I've done a lot of videos. That's the only thing I'm up on is ET. Everything else I'm down. So whose earnings today is Dick's Sporting Goods, Guidewire, Casey's. I never even heard of these companies. H&R Block, Domino's, Bird Construction. I actually did a video on Bird, and Vermilion. So these are most of the big gainers are oil, of course. I should have just put it all into oil. Houston American Energy is up 500%. I don't know how it could be up 5 times. Imperial Petroleum is up over 100%. But when I looked earlier, ET wasn't even up. It was actually down today. It went down today. I don't understand. I guess it's a midstream company, so it doesn't have as much upside as see a lot of chasing higher oil prices now. They love oil, but now hated it when it was negative. Makes no sense. Oil is screaming buy. It was a buy. It's just that it's really volatile, and yeah, I think the best thing is to buy oil stocks like the ones I go over my channel, like BP, ET, Exxon, because there's 11 oil ETFs, and they're pretty risky. They almost always go down over time, except if you happen to buy it the past few months, then you'd be making a lot of money. So Dick's has earnings today. It's down 9%. Oh, it's tomorrow. Guidewire earnings. That's also tomorrow. I can't figure out this website. Every time it's always wrong. Every time Squarespace. I don't know. Who has earnings today? Let me go to net. This is probably better. I'll just use NASDAQ, even though it doesn't give all the companies, just NASDAQ companies. So Anglo Gold, Sienna Corporation, Vermilion, Squarespace. Somebody mentioned IonQ. Some Logic, Intrepid, Potash, IDT. So Anglo Gold. Let's see. Gold would be a good hedge if you're well, it's up, so they must have beat earnings. Bark. That's a SPAC, right? Bark. I don't know. I don't really. I think it's too risky. I wouldn't invest in Bark, but let me see. Last time I did a video. Bark. They were trading at 7 when I last did a video. I like the business model because I think when you have a business that caters to children or pets, I always think of that as a good business because that's one thing people will not skimp out on. But it's just, I don't know, these SPACs, they look terrible. Look at this. It's not a SPAC? Is this not a SPAC? Well, either way, Meta will recover, but you can never know how long. Yeah, that's the thing. Like, what if you need cash? Like, you could be waiting years to finally get back to where you are. Does anybody like Bark? Like when you envision a company, like a successful company, like you don't think of something like this, providing dog treats and dog and stuffed animals. Focus, right? Like Amazon delivers everything. And then tech companies are always are easy to scale and they could grow. It is too limited. So I just don't see, for a swing trade, I could see someone making money with it. I'm doing a video on oil. There's 251 companies in the oil and gas industry. These are the 6. There's integrated marketing, E&P. and I rank them, and I have a scorecard of how I ranked each company. And if you're a Patreon, then I'll put this Excel file on my Patreon page, so you can, if you want to adjust the rankings yourself. But I ranked it by market cap, and then price to book, price to earnings, price to free cash flow, and price to sales. And I'm just doing a video, and I'm showing the rankings, and I'm also going over this high level information, like in each of the industries. There's 6 industries, how many tickers, the average market cap, the average yield, what they do, and then just some basic info on the oil industry, because it's an education channel, so I always try to give information on how oil prices affect the economy. And then we'll talk about the ETFs. There's 11 oil ETFs. But of the 11 oil ETFs, there's only one that's positive in the past 10 years. This beta crude oil ETN. It's up 269% in 10 years. But every other oil ETF is down in 10 years. And like some of them are down, like, well, I'm talking about ETFs. This one is down 98% in 10 years. It's a leveraged ETF, UCO. But oil companies are doing well. If you want exposure to oil, definitely. But it's volatile. You can't hold for like a really long time, because you'll eventually you generally, if it wasn't for the dividends, there's not much upside. CBR, like a 14% dividend. So I don't understand why it's down like 8%. Shouldn't every oil stock be up? By logically, shouldn't they all be up? And this is an integrated company too. Does anybody know why it doesn't? Houston American Energy, Imperial Petroleum, IMPP. Imperial Petroleum. This is an EMP company. Maybe EMPs are up and not. Let's see, OAS. OAS, yeah, that's up too. EOG. So I guess the upstream companies, EMP, exploration and production, those are the upstream companies. They actually pull the oil from the ground. They're much more susceptible to the price of oil. Midstream companies are the least susceptible to oil prices, because they just transfer the oil from one party to another. They don't actually take as much risk. No problem, Kevin. Zraker. Well, I bought it. I bought ET like 2-3 weeks ago. I bought a few stocks. Facebook. I bought 5 stocks. Yeah, 5 stocks. They're all down except ET. Facebook, which I can't even look at my portfolio. I won't even look at it. If I happen to be on the screen, like, when you click between screens to get, I'll close my eyes so I don't see the portfolio, and I click to the next screen because I don't even want to look at Facebook. I'm gonna hold it. I'm not, but it just it eats me up inside. Sienna Corporation, they had earnings today. They missed revenue, but they beat their earnings. It's down 11%. BPM may be good for a long-term investor, but what I read some reports is yeah, BP midstream. Yeah, I think the midstream. If you want to invest in oil, but you're not too comfortable, go for a midstream. There's not that much risk, and you get a nice dividend. But they're mostly MLPs. You see LP, limited partner. It's an MLP. So the Antero midstream. But let's see. Let's say you invested in a midstream company. Let's say you invested in a midstream, I mean, an MLP, and then a regular stock. So 6% is the dividend MLP. Say your tax rate is 33%. That's your that's your regular tax rate, not the long-term capital gains. You would receive 4% after your taxes. And then you would pay, I think, 10%. So even in this case, even though you do use like for REITs, MLPs, and BDCs, on most of the dividends you pay regular income tax, which is the higher rate. But they usually pay such high dividends, it usually makes up for the fact that you pay the higher rate. But you just want to look at it. I mean, if they're both the same rate, you obviously you would take the regular one, not the MLP. But if they were close, like the MLP was 5, then you'll be better off with the 4% from a regular stock. If it's a retirement account, it doesn't matter. Although for that's not true. For MLPs, sometimes retirement accounts, I don't understand exactly why, but they recommend don't buy MLPs and retirement accounts. I can't remember exactly. I wish I got a tax accountant to explain this to me, because I talk to a lot of CPAs and they don't really understand this that well. So okay, if you have an MLP in a retirement account, and if you receive more than $1,000 of dividends, that makes it subject to immediate tax. Most other investments in a retirement account are not subject to taxes until you take the money out when you retire. So that's what I read. It's a good idea to not hold them in a retirement account, but I really want to talk to a tax accountant because I don't usually believe what I read, or at least I want to understand it better. Because when you own an MLP, you actually own a company. You're not like a shareholder of, like when you own Microsoft, you own a share of the company. But when you own an LP, it's a different type of ownership where you're a partner of the company, the same way as if you and a friend went in together to buy a business and run that business. It's the same thing with an MLP. But hopefully, I can find a tax accountant. But yeah, I thought CPAs should know this stuff. I talk to CPAs all the time, and they never seem to understand these like really nuanced questions I have. So I guess a certain CPA will understand. Nokia under 5. The problem with Nokia is it just, I don't know if it's ever going to go up. Like I thought, like they seem like they're doing really well, but the stock just never goes up. I mean, they're making much more money than they used to make. Well, you in order to contribute to a Roth, you have to make below a certain amount of income. I used to max out my my 401k, but I don't really anymore. I did want to invest in Nokia, but I decided not to. Like if you invested in Nokia, anytime from 94 to like 2011, anytime in that time frame, you'd be down right now, unless you caught it here in like 12 and 13 when it was below $4. But you pretty much, and if you bought it, even it doesn't have to be up here. Like if you bought it any time in here in the 20s or 30s, I don't know if you'll ever make money on this stock. It seems like it should go up, but I don't know. I don't. It never does. I was thinking maybe they just have too many shares outstanding. 5.5 billion. Maybe it's just too much. But I bought Intel instead of Nokia. That was my. They've done a lot of splits. That's why they have so many shares outstanding, because they've done 5 stock splits. Of course, in the mid to late 90s, they were a really big company. They were the number 1 cell phone provider. Do you want to get between BEP and B? Between these two? 25 billion. So Brookfield Renewable Corporation. I like MU. Yeah, MU. I like it too. I mean, so, so Bepsi is a subsidiary of the MLP, BEP. I think I think everybody who's at least 30 years old probably might have had a Nokia as their first phone, or one of their first, or at least own a Nokia at some point. That's a tough one. I think JP Morgan would be better, but it's just I just be guessing on why it would be like nobody could understand what they do, like what the financials or the numbers represent. Even I think people work there probably don't even understand it. There's just so much complexity going on. Yeah, MU. I did a video in the 40s. I'm so stupid. I actually bought it when I made the video, and I sold it early because I needed money for something. I can't remember why I sold it. Um, but that's one stock that's pretty much stayed up there. It's come down a little bit since the highs, but it's still a lot higher than it was pre-COVID. But a lot of stocks are back to where they were pre-COVID, or even lower. What's a stock that really shot up during COVID? Not Zoom, not Peloton. Give me anybody have an example of another stock that shot up from COVID? Because almost all of them have come back down to pre-COVID levels. I mean, like the good companies aren't coming down that much because they're just good companies and they should increase over time. But like the crap companies, maybe Neo, yeah, the companies that aren't so solid, most of them all have come down. This is still trading. It was say $3 pre-COVID, $4. It's still trading a lot higher, but it's come down quite a bit. Unless you picked it up before the big run up. Look, I mean, this is a perfect example of because she probably buys a lot of these meme type of stocks without solid fundamentals. So she's pretty much pre-COVID. I mean, she's 10% above COVID. But I mean, one point she was what? Triple COVID. She was 200% up. That's actually up about 30-40%, but it's still down like what is 60% from the highs. Well, Palantir, it just kept dropping. It never had to pump. It just kept dropping. There was only that pump initially. had a good. Do you think will it finally head into the 90s crash, 90% crash? Um, hey Riley, what's up? Um, I don't know what that means. When 90% crash? You mean the 1990s crash? Um, you have to be if you're a CEO of a company, you have to be positive. I remember um, listening to earnings calls of after companies went bankrupt. Um, I listened to some of the earnings calls uh, a few quarters before they filed bankruptcy, and it's like crazy how how positive and like how great the company sounds, and they're like talking about it like they have these great plans in place, and so they're always extremely positive. The CEO, it's a 9% crash by the end of this year. Um, I don't see it. I don't see it happening, but because this is what like if you're a company that's not really that strong of a company, like you're just going back to where you were pre-COVID. Like Peloton's exactly where it was pre-COVID. That's where it belongs. It should have never been this high. And I don't know if they're going to go bankrupt or anything, but they're not that great of a company to be trading at these levels. Um, and the $1 trillion companies and the big companies, they're all making a lot of money. Like if you look at the 100 billion or even the 50 billion market cap companies, they're all really profitable companies. Even Tesla, 5 billion of earnings. Look how much it grew from negative. So it's hard to imagine these. There's a dozen companies, Tesla being one of them, that hold up the markets. The like Nvidia, Microsoft, Apple, Tesla, they drag up the markets, and these are profitable companies. Like they're not losing money. In 19 in 99, these .com companies weren't profitable. They were all losing money. So that makes sense why there's a crash, because when you pour money into a business that doesn't make any money, there's bound to be some type of crash. And there's companies that lose, go bankrupt. They lose investors a lot of money all the time, but not so many at once, like the .com. So I don't see it happening. The companies now seem they're pretty solid. They're profitable. They don't seem like I I could. She's pretty now for her age. I could just imagine her when she was younger. She must have been hot. Even in her 50s and 60s, you can tell that's probably a daughter. Yeah, right. That would be. I like Kathy Wood. Like I don't. I know people bash her. Um, she takes risks. So these are all the oil and gas stocks in the market, all 251, and I rank them all. So if you're a Patreon, you can I'm going to save this file tomorrow. So if you want access to the file, you could look at anything here. Do you guys have Vermilion? They do earnings today. Vermilion press release Q4 revenue. It's hard to find if they beat earnings. Like maybe because it's Canadian, maybe it's harder to find. Does anybody invest in these companies that have earnings today? Rover. Wait, Rover's a publicly traded company? Those went up a lot today. This must be a SPAC. This is when you know the market is going downhill. When the only way a company like Rover could be publicly listed is if a SPAC buys it. I used to do Rover dog sitting. They actually kicked me off their website. Rover earnings. They're down 7%. I need to find a way to generate revenue on my channel because I'm probably going to need to get a job soon. I was thinking one way to do it. If anybody, I want to put my Excel model on a website so people could plug in, but it's a little complex, and I want to also pull data about each ticker, like the revenue for each company and the market cap. So when people use the DCF, they can have the up-to-date numbers. If anybody knows a way to do that. It's easy to trade stocks when it's not your money. And I'm not saying it's easy to take risks when it's not your money. Mobileye. Yeah, they were mentioning that they're gonna spin off Mobileye. I hope that I did buy Intel, a lot of Intel. I'm down about 15% because I bought it in the mid 50s. I think I bought it around here, 52, 53. Intel self-driving car unit, Mobileye filed for an IPO. So Mobileye is a subsidiary of Intel. And once it goes public, it's still going to remain a subsidiary. So all of Mobileye's financials will be consolidated into Intel's financials. So if Mobileye goes up a lot, then so will Intel. It so it's not a spinoff. A spinoff would be to consider spinning off Intel's chip operations, but the company still plans to invest billions. Yeah, it's not less. A spinoff would be. No, I don't think I'm saying that right. Yeah, so Intel's problems are that they try to do the manufacturing and the design of the chips. They just need to pick one, but that's what. Hopefully, it works. I don't think you could buy a Mobileye. It's maybe in a few months. Mobileye's they filed for IPO, but they didn't complete the process. It still has to get approved and everything, and it needs to get yeah. A lot of things have to happen. One of the biggest stock market flotations of the year. The move to list Mobileye is part of Intel's broad strategy under CEO Pat Gelsinger. Investors have made big bets on new technologies in the business of global. If you want exposure to Mobileye, buy Intel now, or you can wait for Mobileye. But the problem is, it's gonna shoot up fast. So you'd want to wait probably 6 months to a year because it's gonna come back down like most stocks do. AQB, AQ Aqua Bounty. This company reported today. Is that what you meant? Aqua Bounty? There's not much more downside for Alibaba. It can't. I mean, I don't see how it could go down that much more. It's the amount of money they have in cash and the amount of money they generate. It's like they're paying us to buy the stock. It's so cheap. If it wasn't, yeah, I mean, once things get kind of on a what else? Sunworks up 40%. USEG. I said Bed Bath and Beyond. I don't know why that went up so much. Yeah, I did American Airlines. I probably wouldn't buy an airline because I think oil is going to continue going up, and airlines will keep going down as oil goes up. Oh, Reddit has been buying GameStop. I mean, Bed Bath and Beyond. Update. How many cents? A letter from the billionaire co-founder of Pet Products, Chewy. Well, I think almost all stocks were down except oil stocks. Higher oil prices drag down most stocks. AMRS? AMRS. Specialty chemicals. Emeryville. Is this SPAC? Sheesh. See, when you see revenue double, like you always make the assumption that, wow, the company is really doing well. They doubled their revenue. So this looks like a good buy. It might be a good buy, but you can just buy another company. You could just acquire another company that happens to have a similar amount of revenue than you, and you double your revenue. It's not like you did anything. You just took on a lot of debt, or maybe sold some stock to buy another company, and now your revenue's up. I mean, I don't know if that's the case, but they're still cash flow negative, except in the first quarter. Yeah, C Limited. It was so obvious when Russia invaded Ukraine. We should have just sold everything and bought oil. It seems so obvious, right? And we didn't. Next time there's a war, sell a lot of your stock and buy oil. Yeah, C is just getting killed. It's down like what, 60, 70%? It was over 300. Now it's under 90. But once again, you see revenue double, which is good. But did it double because the company is organically growing? Or did it double because they just acquired a bunch of businesses? Because when you acquire a company, it's usually you're losing money because you usually have to pay a premium. They are cash flow positive, but just from looking at the cash flow, it seems like, of course, there's more to the company than just the cash flow. But it seems like they've gotten worse from 2020. They have half the cash flow. I mean, you want to look into it a little deeper, but $10 billion of cash. So they issue lots of stock and lots of debt. How long will oil go for? I think it's going to keep going up, but it's hard to time these things. But I could see it going up a lot more, like to 150, 175. It's just it's risky. Yeah, it's really Russian Minister of Energy says Russia could cut off the Nord Stream pipeline to Germany. Okay, I will break a new all-time high. Oil, that's my personal. Oil 250. How can a company have positive earnings with negative cash flow? I talk about this a lot. Which company? Do you have? If a company if a company sells like one of their subsidiaries, AMRS. Most business need to close. So the way you can have positive earnings. If you have revenue of 100 million, expenses of 150 million, your operating income is negative 50 million. But let's say you sold one of your subsidiaries, and you sold it for um, 75 million. If you sold a part of your business, it could be anything. It could be a factory, a subsidiary. Your net income is 25 million. But when you calculate operating cash flow, you start with net income, right? And then you have to minus out this 75 million because it's not part of your operational business. When you sell a part of your business or when you do an asset impairment, it has to be subtracted out on the statement of cash flows because it's not part of your day-to-day business. It's not an operational part. So you have negative operating cash flow and positive net income. That's what you said, right? That's one example. There could be a lot of ways. Sometimes you have gains from if you're investing in other companies, you have to report that company's profit or loss on your income statement. So if this company, ABC, say they invested in Apple, I don't know why, but say they invest in Apple, and Apple reported big profits on their income statement, they have to report that gain on their income statement, but minus it out in the statement of cash flows because that's a non-cash item. Yeah, Amazon. I bought that a few years ago, and I'm not even up that much. Sheesh, keeps coming down. I'm probably even. I don't. I can't remember when I bought it. I think it was in 2018, 19, maybe. So I'm probably up. Oh no, I bought it April 2021. So I'm down. Powell's gonna have to pull Volcker and raise rates. Any other? Is Domino's? So Domino's. Oh, that was March 1st. I don't know. This website sucks. Yeah, it may be bloody for a while. It's gonna be rough. Okay, so I'm gonna sign off. So I usually do this 3 p.m. during the week. Recap. So thanks for joining, and I'll probably see everybody tomorrow. Hopefully it'll be a green day. Okay. See ya.